Hi guys. I'll start by wishing us a happy trading week. And firstly, I will be going through uh, my analysis for the week. I'll actually be explaining my analysis for the week and also a summary of the previous class for those of us that missed the previous class. So let me go through my list. So firstly, I'll be walking us through top-down analysis, and I'll also be walking us through um, order block, which we discussed in the other class. So mainly top-down analysis is the process whereby we start our analysis from the higher time frame to the lower time frame, then to our entry time frame. Now, why do we have to use the higher time frame? So we get a clearer view of the whole market. It's just like using the Google map to zoom out of the earth. There's this earth features that Google has that once you zoom out, you can see everything. You can see the map, you can see where Africa is located, you can see where the Asia and the Europe map is being placed. So that same thing goes on the top-down analysis. We actually use the top-down analysis so we can get an overview of the whole market. Let's know where the market is going to and where it's coming from. Now, I will start by saying, firstly, to run the top-down analysis, we'll use the 4 hours or the daily time frame or even the weekly and above to see the whole market overview. The whole market overview. So this is gold. From the higher time frame, we can see, which is the weekly time frame over here. We can see that gold is in an uptrend, and also as we step down to the daily time frame, we would also see that it has created series of higher high, higher low. Please don't mind my indicator. This is an indicator that helps me plot out the order blocks, so it saves me time. But without it, I can actually plot out my order block. I think I should take out some stuff from here. Okay. Let me use it to explain. So now, in an option, we'll have a higher high, higher low, higher high, higher low, higher high, and higher low. Let me also step down to the 4 hours because I'll mainly be discussing with the 4 hours. So now, since I know this trend is in an uptrend, the next thing I will do is to step down to the 1 hour time frame where I would now get my structure. From the 1 hour time frame is where I get my structure. So now I know this is a higher high, this is higher low. Let me bring out this thing so it won't confuse you guys. So let me take out this one so that you guys will understand what I'm explaining. So from here, you will notice this is a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Then we have this higher low at this zone. Now, since I have seen my structure, what I would do is to plot out my key levels, my supports and resistance, which we can clearly see. So this is my support and this is my resistance. This is also my support. This can also be seen as my support. Now, what I would do in this market, when I pick out these structures, I would now look out for entry. Since I know it's in an uptrend, I'll look out for buy I'm only looking out for buys on this market. So the next thing is stepping down to the 15 minutes or 30 minutes time frame, which I mostly get my entries. Now I would look for OB levels, which is order blocks. This now brings us to order blocks. Now order blocks are levels where price were being taken from, where bulk orders were being taken from. Buying, selling activities took place. So a high number of order was taken on that zone. And how do we know? It's through the candle reaction. Most times we notice in zones like this, we notice candlestick patterns like engulfing candle, either bullish engulfing or bearish engulfing. Bearish engulfing is in the selling side and buying engulfing is in the bullish side. So the bullish is the buy while the bearish is the sell. So now from here, you have to now map out the order block level, the order block zone. So it was being mapped out here, and over time, gold came back to that level to test that order block that was created where price took off previously. So when it got to that level, it reacted to it and created another buy order from that level. It reacted to that level. So there was another order in that level, high number of orders, in that level. So if you notice, when the market took off, it came back to retest the level. It came back to mitigate that level, that candle, before moving to the upside. So if I was to enter this trade, I would have set my order at this order block level, 50% of the level, or possibly around this zone. My stop loss below the structure is the order block level. Then my TP will be at the resistance. If I was to trade, if I was to place this trade, So the second one is also known as liquidity zones. Liquidity zones are areas whereby orders are being stacked. Where we mostly see liquidity zones are zones like the previous structures. Wherever there is a higher high, higher low, down below here there will be bulk of orders. Zones like this, if you've seen SMC traders whereby they mark zones like this and indicate it with a dollar sign, this indicates the liquidity level, liquidity zone. Zones whereby orders are being stacked, be it buying or buy limits or sell, be it buy limit or sell orders. Most stop losses will be placed on this level, and most buy stop will be placed at this level, both sell stops. But the whole thing is, liquidity is actually money. Whatever you see on this chart is moved by liquidity. Be the market going up, or coming down, or going up again and coming down. What moves it is liquidity. So if the market is coming down and it doesn't see liquidity at this level to move it to the upside, it will keep on coming down till it gets the liquidity is looking for at this level, then pushes to the upside. So if this is zones where liquidity normally sits in, zones like this one, it comes up, comes down, comes up, liquidity will be sitting at this level and also sitting in levels like this, also levels like this, to be sitting in this level, and also let me bring it out, and also be sitting at this level. So the market will have to come down, pick up the liquidity, and move to the upside. Now, this is why I will not say trend line is not good, because I once used trend line, but this is it about trend line, because I think one of you guys asked me about trend line. So let me explain. Now, if you are to use a trend line on this kind of trade, let me plot out the trend line. Let's say we are waiting for a trend bounce, whereby we'll take our trade from this zone. Now, if this market starts moving higher high, higher low, higher high, and when coming, it does not get the liquidity it's looking for to push from this line, it will move as if it did not see your trend line and get down to this level where it gets liquidity. And once it gets its liquidity, it takes off from here. Now, it might not take off once, but it will come something to create something like this, and start moving just the way the chart moves. And while it's making this move, it's creating enough liquidity again at this level. So when it comes, it gets the liquidity and moves to the upside. So the whole thing I'm trying to explain here is the whole movement is based on liquidity, whether it's moving up or moving down. It's liquidity that moves the whole market. So any strategy or concept you are using, you must know where the liquidity is, because once you can't spot the liquidity, then you are the liquidity. You understand? It will have to take your money as the liquidity. So your strategy has to be able to spot, give you the ability to spot where liquidity lies, so you can trade on the right side. So zones like this are zones whereby you go to wait. So let's use this one as an instance. At this other block level, you noticed if you were to pick a trade, you would come down here at this level below here. Okay, I think the market just opened. So now, if you were to place a trade on this trade, place another, you would wait at this level because there is enough liquidity here. And if you notice, when the market came down to get the liquidity here, it started moving to the upside. If it doesn't get the liquidity it's looking for to take this market to this zone, it will still come back and look for liquidity around this zone, around this level here, this level, or the one below, because there's another block at this level. But the major ones are this one. These are the major levels. Okay, so let me move to the next one, which is a candlestick pattern. So I dropped a PDF on candlestick pattern. You guys can go through it and drop your questions on the chat. Then support and resistance was explained by Emblazon FX. Then we did last week's trade review. Now let me open GBP card and tell you why I placed. Okay, GBP card. I think, okay, this is a new chart. Now, this zone here is another block zone. Firstly, like we said, when we open the chart, we first need to run a top-down analysis so we know where the market is coming from and where it's going to, which is knowing the bias. So from here, the bias for this market is bullish. It's in an uptrend. The next thing I would want to do is to drop down to the 4 hours, either the 4 hours or the daily time frame, to confirm my bias. Then I would move down to the 1 hour for structure. Now when I move down for structure, I would pick my OB level because I could spot OB at this zone here, order block at this zone here. Since we are not sure if this will hold, but if this doesn't hold, which I plotted before on my current trade running, if this zone does not hold, I'll be looking forward to this zone below here, then my entry will be at 50% of this zone, which is here to here, which I also see that there's liquidity here. Then my SL will be below that level and my TP at the resistance zone. Now if it doesn't respect this, I'm not the owner of the market, meaning the market is doing its thing. Like I said, just as I explained before, this is a support level and the top there is a resistance level. We do not control the market, but we trade what we see. On my last week's trade, this was where I took my entry from, but I also plotted this zone. But my entry was at this level here, around this level. My SL was below here, and I was also aiming for this high, because I know it was around a 1:3. I was aiming for a 1:3, which is this. So I think it's still playing out. But with what I'm seeing, if I was not on the trade, I would have added positions at this level and my SL at the same level. So we are still waiting to see how it plays out this week. I also analyzed the GBP, JPY. Was it GBP, JPY? Yes, it was GBP, JPY. So my entry was around here. Sorry, my entry would be around here, around this level. Then at the top, heading down to this OB zone, which I would possibly be looking for something like this, then to the downside. Now when it gets to this level, I won't just jump in. I would want to see some candlestick pattern, like wicks, and possibly either a hanging man or shooting star, just a candlestick pattern that shows me that this market is about to react at this zone. Possibly I would even like to see a bearish engulfing candle at that zone, or series of wicks, but there must be something indicating that yes, it has respected this zone before I go in. So that's just what I'm looking out for the week. But within the week, if I get any entry, I will drop it for you guys and tell you guys why I am going in. I'll give you my reasons and I'll tell you what I saw or what I'm seeing that has convinced me to go into that trade. That has actually convinced me to go into that trade. So I would also like you guys to drop your questions, then I will answer you guys with a voice note. So for now, on this pair, I'm looking out for a sell. Okay, I can also spot an FVG at this level, an FVG which is a fair value gap on the market. So I'm looking out. I think my TP will have to be taken down to that zone because the market will have to come and fill this FVG before moving to the upside. So when it goes up, this is what I'm looking out for. I will drop the screenshots for you guys. I'll drop this trade for you guys. This is just like an A+ setup. I will drop it for you guys. Let's see how it plays out. So I analyzed 3 pairs. GJ, this is what I'm looking out for. Then GBP card. I'm bullish on GBP card. I'm still bullish on GBP card. I'm bullish for XAU USD, which is good. I am still bullish. I'm still bullish on gold. Guys. So see you all in the next session. Thank you.